Hi, I'm Lawrence. I was always told to get a degree and a job at a good company, but just 3 years into my safe job, I was retrenched and left broke. That idea no longer works. Instead of one job, we need to be focusing on multiple streams of income. As a full-time property investor and coach, my goal is to educate you and other South Africans to reach financial freedom through property. Let's get started.
Is a 2-bedroom property in Limpopo. So let me quickly open up my screen. So I'm just going to open up the different tools that I use. So obviously I use my property app. I also use Pocketlet, and we're going to have a look at this property here, which is in Mookgopong. So it's a 2-bedroom flat with bargain written all over it. With a little tender loving care, this unit will be yours to joy, for your joy and safe haven. Okay, so it's got a double parking, front stoop, open kitchen plan, scullery, 2 bedrooms. Okay, cool. Key things that I want to be looking for here is levies and rates and taxes. Those are expenses that I need to include. Also probably just want to have a look at some of the pictures, right? So this is on the outside. One of the key things that you want to do when you're looking at an investment as well is you want to look at the roof. So here you can't really see it, but if this roof was sagging, or if the roof looked like it needed a little bit of work, there was some holes or whatever it may be, that's usually a red flag. Roofs are and tend to be very expensive to fix. From the outside, I would say this looks actually quite clean. Brick face is great because it doesn't mean that there's a lot of there won't be a lot of renovations. Brick face isn't always the prettiest to look at, or it depends on what you like to look at, but from a maintenance point of view, it's very easy to maintain. Okay, so what we want to look at here is what's the current condition of the property. Now, what you can see here is, I don't know if you agree with me, and I hope not to offend anyone, but this kind of looks like a grandma's house. You know what I mean? Or like the furniture just looks like it's really old, like this has been the condition of the property for the last 20 years. So the thing for me is this needs to be modernized. This will most likely need to be modernized. In terms of like the basic finishes, you can see the paint still looks good. The doors look like they're in good condition. The kitchen looks simple. The bathroom actually looks fine. I mean, obviously the style is really old. Anytime you see a colorful toilet and bathtub, you know it's an old house. If you see like an avocado bathtub or a blue toilet, you know it's an old house, because for the last 10 years most people have just opted for white bathtub, white toilet. That's the way it's always been. So definitely seeing a trend of it being an old house, but not in bad condition. It looks like it's pretty clean, well maintained. You could definitely see that the owners here have respect for their house. I would say the kitchen needs a little bit of sprucing up, maybe a repaint, get rid of this carpet, put a new carpet, or put some tiling in. But that's what I'm seeing from that perspective. Okay, so the first thing that I need to do, let me just log into my tools here. Now, if this is the first time you're seeing these tools, My Property app is the tool to analyze the deal. It does all the mathematics and calculations for you. And Pocketlet is just a nice tool to scrape data so that you can get some averages in terms of what the rent could be for that area, or what the average purchase price could be. So let me just log in here as well. It does sometimes take a little bit of time to get going. Okay, so the first thing is I'm going to go here to the buy to let calculator, and this is what I'm going to use to analyze this deal and see, is it worth my time. Okay, so start off by just copying this link so that I've got it for future reference. Asking price of 267. Okay, so I'm going to put you at 267, 1, 2, 3. Now, I usually go in with a bit of a discount. I'll probably go in with about 230, which is a 13-14% discount. Now I need to work out what my monthly rental income could be. This is where I use Pocketlet. So I go to Rent Estimate tool. I choose my area. So this is, let me just copy and paste this. I hope that they will have this area. No, nothing found. So what I'm going to do, I'm going to go broader, and I'm going to go to Limpopo. Let's see. Okay, I'm going to go there. Now I choose it's a 2-bed. Is it a 2-bath? No, it's a 1-bath. So I go 1 bath. Now what this pocket let tool does, which is very interesting, is it goes to all of these sites, Property 24, Private Property, IOL, etc. And it goes and finds all the properties that have 2 beds, 1 bath in the Limpopo area, and it gives you an estimate of what rent you could expect. I'm not saying that this tool is 100% accurate, but I do use it quite a lot to give me some sense. So here it's saying that about 4,200, is based on what they're kind of seeing in that area. So I'm going to put in here 4,200. Right, step number 2, buying costs. A simple tool that you can use is Uber. You just click this boot button here. It takes you to Uber. You put in your purchase price of 230,000. Now let's assume that you're going to get a 90% loan, which means you obviously have to put 10% down. You can now work out quite simply what your transfer cost is going to be. So in this case it's 26,500. I go now to my refurb costs. So what I'm going to do, I'm probably going to put about 5,000 into the bathroom. I'd like to replace the toilet and the tub, or at least paint it. Painting, definitely repaint the house of 8,000. Your electricals maybe 5,000, and kitchen 5,000. So we're looking at a budget of about 23,000 for the renovation of the property. Finance costs, we go here 90% at, let's say, 9% interest. I know that currently our interest rates are at 7%, but I would recommend that you use 9% or even 10%, just because once the COVID thing finishes and the economy recovers, the interest rate is going to go back up, and you don't want to do a deal just because it works at 7% interest. It needs to work at 9% interest, and then it's a decent deal. Okay, the next step is to go to cash flow. So this is where we're working income minus expenses. So firstly, we see here that our levies and rates and taxes are quite low, 350 and 388. So I go here 350, 388. Voids, this is the potential that the property will be empty. I usually work on between sort of 4 and 8%, which is about 2 to 4 weeks in a year that the property will be empty. So I'm going to go in the middle. I'm going to say 6%. Your management is probably around 8%, and maintenance I'll probably put about 5% aside. So here what we can see is, after all expenses, the positive cash flow of this deal is 750 Rand. Which is not bad. Now that's the first indicator. The second indicator is return on investment. So that's where we go to the summary tab. It'll then tell us that the return on investment is 12.43%, which is not bad. If you're getting 6% at the bank and this one's giving you 12%, you're doubling how hard your money is working for you in this property versus leaving it in the bank. If you scroll down here, you'll see that the capital you need to put into the deal is 72,000. That includes the renovation budgets, your buying costs, and your deposit. Okay, so this is an example of a deal. I would definitely consider this an opportunity. What I might go do is I might go to my area analysis and I might drop my offer by 20,000. Now if I go back to my summary tab, it's going to shoot up the return. It's probably going to be 15%. Now we're looking at a great investment. Above 15%, you're looking at a slam dunk. The question obviously is, will they accept such a big discount? Is the owner motivated enough to accept a 210,000 Rand offer? You never know, right? But your job as an investor is to find a deal, find the number or the offer price where the deal works, and to put out as many offers as you can. Currently, as we're sitting here today, I've probably got about 6 or 7 offered purchases out at the moment. All signed, because I know that of the 7, probably 1 is going to come back as a yes, the other 6 are going to come back no, because you're always trying to get that discount. Okay.
Are you tired of having more month at the end of your money? It's time to venture into property investing. And although it may seem scary, don't worry. We've created tons of resources to help you get started. From tools that help you analyze deals, to online training courses, to one-on-one specialized coaching. Click the link in the comments below and get started today.